GM, ladies and gentlemen, welcome to the trade breakdown of the trade that we took today. So, let me start off with. So, see, what I personally believe in that if you want to become a good trader, one of the most important things is you need to have confidence in the trades that you take and in the trades that you're holding. And unless and until you don't have that, you are going to face a lot of psychological issues. So, this was the support and resistance levels that I marked. Now, what gave me confidence in terms of going short was, if you look at this structure right here. First of all, price. If you look at this entire structure, price made a high, came down, tried to make a new high, failed. Right, did not break. Once again, which shows weakness in the price. Now again, price came down, made a high, tried going up, failed to make a new high. Again, we're seeing weakness here from the buyers, which gave me some more confidence about that. Now, if you look at this entire structure itself, this is a whole head and shoulders pattern, again, which is another huge bearish sign. So we've got three confluences so far, from the higher time frames till the smaller time frames, and then why I said it is an A plus setup and why you can so when you can take direct ambush entries, when you can just take direct entries without waiting for a candle close, is when there's a zone which has been tried to break multiple times but it has not broken, right? So if you look at this, the price tried to break it once, twice, and this was the third time. So when the price is going to break a zone for the when the price is approaching a zone which was trying to be broken, the move is very good, right? And obviously it was a time around 10:45 11 a.m. in Dubai, which is obviously a time where the pre-London volume kicks in. So I made a clear impulse entry, I made a clear ambush entry over here. So by the way, I had a sell stop at, let me just share with you the exact number. So I had a sell stop order at 218.4, which is right here, if you can see, right below this low. Why so specific? Because if you look at this low, the low is 475 right here, and my order was 4, right? My order was right below here, so that in case in case the move happens very violently, at least I capture the move. So that was there. And then the other entry that I took, that's why I didn't take 10 lots together, I took 5 lots separately, because 5 lots was a sell stop order here, and then the other 5 lots was my entry which I took manually, right? And so let's just wait for it. So see, I took the entry on this candle, my stop loss was right above here, my stop loss was 20.5 above this particular structure. And yeah, so that was it. Now let's talk a little bit about managing this particular trade, holding on to this particular trade. So obviously, when I took the trade, the price gave some candles against me, but I was very clear that unless and until price makes a structure like this, I will not cut my positions, because this could be just a little bit of a shakeout, right? So the price did this, then came down, which was absolutely fine. Now, how I got more confidence in terms of holding this particular trade, which I feel more important to you guys than anything, because so see, this was an area where the price got rejection. This was the second area where the price got rejection, and then obviously this was our support region altogether, right? So what you have to see is how is the price reacting when it is reaching levels where price rejected earlier, right? So this happened, price just straight up busted through this level, barely respected it, right? Straight up went through it, which told me that there's enough selling pressure, there's enough volume. But when it came to this particular rejection level, you can see the price went up for like 5-10 minutes here, but just one candle is not enough for you to drop down on your positions, right? But if the price, let's say, would have done something like this, I would have cut some positions over here, or cut some positions at least here, because then the price is acting bullish. But the price did not, so I held on to it, and 2312 is where I exited. I was supposed to exit at 2310, but I was seeing some signs over here, some little signs, so I thought it's best to exit right here, which is anyway a 1:3 risk to reward ratio. If you look at the trade altogether itself, my entry was somewhere here, my stop loss was 20.5, and my exit was this, which is an exact 1:3 ratio trade, where I made around $6,300. So yes, this was the breakdown, guys. I've already shared, in fact, the profit screenshot and the execution screenshot, so I don't think you need that. But yeah, so this is how